So friends, welcome. Friends, just 5 days back, I saw this article. India to become $4 trillion economy in FY25. FY25 means our financial year 25, which is end of 31st March 2000, end of March, which is 31st March 2025. So this financial year, right? And it will surpass Japan in FY26. So if you look at this article talks about that we are already a $4 trillion economy and then blah, blah, blah. You can read it, right? So Sanyal also said Japan is now a little ahead at $4.1 trillion. Then I saw another article. So let me just zoom this article a bit. Then it says that India is not yet fourth largest economy or a $4 trillion economy. Niti Aayog CEO's claim is misleading. And this came yesterday. So friends, what I decided is to reconcile the numbers and try to figure out what is going on. Somebody is claiming that we are $4 trillion economy. Somebody is saying that we are not $4 trillion economy. So what is this whole thing, this public discourse which are going on where people are making, conflicting claims? Where is the truth? Now friends, when I did investigation and I found that the truth is more nuanced. Both sides are correct. It's not that, one side is only correct. And let me tell you why I have been able to extrapolate this truth, which is more nuanced, by looking at first the website of IMF, International Monetary Fund. So this is the website of IMF, and you can clearly see that this is India and UK, and this is the crossover point. You see, this is the point. So where it says that India is now at 4.19 thousand, means $4.19 trillion, and UK is $3.84 trillion. And Japan is 4.19 thousand, means we are almost close to Japan, right? But this is the trend, which the chart, which is right in front of you, which kind of gives that, we have crossed UK, right? So clearly see this is the chart. So we are already at $4 trillion and Japan is here. So this is one chart. Then the data which came out, right, from the Ministry of Statistics and Program Implementation. Where is this? This is the data which came out of the GDP projection, which is not an audited GDP projection. This is the data which talks about the provisional estimate of annual gross domestic product for FY25. So these are quarterly data and you can aggregate it. So I aggregated this data in form of this chart. Now friends, when I started working on this chart, I came to understand what is going on. So let me just tell you that how first $1 trillion or GDP in dollar terms is calculated. Because there are two types of GDP. One is GDP constant, which is based on the price of the financial year FY11, 12. Another is GDP current, which is based on nominal rupee price, right? So there are two types of GDP, right? One is the real GDP, which is start of the series. Another is the nominal GDP, where the value of the rupee as it changes, you calculate your GDP based on that. Now, friends, if I take a yearly time scale, the situation will be very clear. Now, you look at our GDP in FY24, right, in nominal terms was 301.2. Let me just zoom in a bit. 301.2 lakh crores, right? 301.2 lakh crores. Now, the provisional estimate for FY25 is 330.7 lakh crores, right? So this number you should just, note this number, right? Now, if I calculate this in value in billion dollars, this number comes out to be 3.894 trillion, which is almost like 3.9 trillion. It is still not, 4 trillion. So why there is a discrepancy between 4 trillion and 3.94 trillion? First is the exchange rate. The exchange rate is the main culprit. Now, what I have done, friends, when I calculated this value of $3.894 trillion, I have taken quarterly average of exchange rate. So what I've done, so if I take a quarterly time scale, you will clearly see this value. So you'll see that these numbers right, which are in lakh crores. So let me just take you through the value in lakh crores. So you see that start of quarter FY25 Q1, this value was 71.1 lakh crores, and then 74.4 lakh crores, and 85 lakh crores, and 88.2 lakh crores. So you divide these by the respective exchange rate, means dollar to rupee exchange rate, which is quarterly average. So when you do that, this is what you're going to get, right, in value in USD, which if you add all these four, the number comes out to be $3.8 trillion. Now, why this IMF number is 4.19 trillion, the projected number? So this is actually kind of projected, or maybe exact what they do, I really don't understand. But what I can tell you is that IMF is not using quarterly average exchange rate, because if you look at the exchange rate, and I'm going to show you the exchange, I'll just pull out the series of this exchange rate. You'll find that this is the RBI data. Let me just pull out this, and you will find that this is this is actually in descending order. So let me just do a zooming, and you'll be able to understand what is going on. Then only you'll be able to you'll be clear what is going on. You can see that how rupee got depreciated. Now, if you look at the last calendar year, right, rupee value is 85.62. Now, IMF, first of all, IMF does not do Indian financial year. They do calendar year. So look at this value, right? And then if you go down below, you'll see that the start of the year, the value was 83.19. So from 83.19, the rupee value got depreciated to 85.62. Now, if you take a yearly average, let me just do a yearly average, this number comes out to be 83.67. But from a quarterly average, the numbers are different. And the impact is significant because if you look at this chart, which is in front of me, the value that our GDP actually has grown at a much higher level in the last quarter in lakh crores. You see, 1017.6, in billion dollars. So let me just do lakh crores. So you'll see that it grew at 88.2 lakh crores. And that's why it is more than $1 trillion in the last quarter, right? Because this value is significantly higher than the other quarter. So even that, the exchange rate, which is higher, because I have taken a quarterly average exchange rate, therefore this value comes out to be very, very large. But if IMF takes an exchange rate which is different, I don't know what exchange rate IMF has taken. Definitely they are not taking quarterly exchange rate because they are making forward-looking estimation. They are not doing what we do because they probably may not have that kind of data depth RBI and other government of India has. So they are making a projection. Because they are making a projection and they are doing an exchange rate also in a projected manner, because nobody could have, imagined that the rupee is going to depreciate and Mr. Trump's policy is going to create an havoc, right, in India, and the rupee would depreciate so fast. Therefore, I think what is going on is, first of all, the nominal numbers, as far as IMF is concerned, may not be the number. So let me again do an yearly rate. Let me take this away from the screen so that you can see here. So this number, 330.7 lakh crores, may not be IMF number. IMF may have projected a number might slightly higher or lower. I don't know, because this particular website does not tell us the story, right? And the second is that exchange rate. The exchange rate must have been very conservative. Conservative means a lower value of rupee to dollar exchange rate must have been used, maybe 81.9 or 82. And that is the reason why this number is coming, right? So this discrepancy and this article, right, which say India is not yet it's all about the exchange rate. How you take the exchange rate, whether you are taking a quarterly average, whether you're taking a yearly average, whether you're taking the financial year, which is the ending financial year, because if you see rupee depreciated further. So if I do a filter here and I take the last quarter, which is March, February, March, and January, and apply a filter here, you can see that the rupee depreciation was even faster, right? These numbers. So here, if you see in April month, so you do a quarterly average for the last quarter, the number would have come out because it was actually reached 86. So if you take the May month out, in April month out and you just focus here, you'll see 87. See, 87, 86. So last quarter of the financial year, definitely there was a lot of depreciation of rupee, and therefore our GDP actually got pulled down in the last quarter because this number which I'm showing, again, let me just do a valuation in USD, and then I'll take a quarterly average number, and you see this number would have been much higher because it is 993, right? Billion. This is 1017 billion. But in lakh crores, if you do, there is a substantial difference. 85 lakh crores and this is 88.2 lakh crores, right? GDP current. So that's all, friends, which I wanted to talk about, and why our GDP, if you look at the growth of GDP, and since we are talking about GDP, so I'll just briefly, because only 10 minutes have passed, we kind of will also spend a little bit of time to understand that what is the reason why our GDP has not grown to an expectation that we would have liked. So if you look at the yearly growth of GDP, the growth of GDP, so I'll just choose growth of GDP in rupees, you'll see that this is 6.5%, right? It has not grown, though the quarterly growth has been very, very significant. So let me just take a quarterly time scale, and you see it is 7.4%. And the reason why quarterly growth has been significant is because, so let me just take value in rupees lakh crore, because of this one, gross fixed capital formation. You see 17.4. Right? This 17.4 is a significant jump from 15 or 15.6, which we achieved in the earlier quarter. So earlier quarter number was between 15.6 to 15, and this is 17.4. So this has bumped up our GDP in the last quarter, and the growth is being seen as significant. Why 7.4%? So otherwise, this number would have gone much below 6.5. We would not have even reached a respectable 6.5, because if we had not grown, because if we look at this, gross fixed capital formation has grown in the last quarter at 9.4%, which is very, very good, right? Compared to what we achieved in the last 4 quarters, right? So that has bumped it up. But on an yearly basis, if you look at this number, let me just take a yearly time scale. If you look at this number is coming out to be, if you take growth, this number is showing out to be 6.5%, right? So that is the main story as far as our GDP is concerned. Other than that, there is nothing much to talk about. So to summarize, the IMF projections are forward-looking projection, and they might have used a rupee to dollar value, which is much lower. Therefore, when you divide by a lower value, your overall output, that the function, if you have a fixed value, let's say if your nominal in rupee terms is fixed, and you divide by the lower value of rupee to dollar rate, you will get a higher number. Therefore, it crosses $4 trillion. But if you actually do a quarterly average and add those quarters, the number does not come out to be, if you look at the GDP current, the number does not come out to be that. If you see, this number comes out to be $3.9 trillion. So that is why this story that you see here, where is that story? This story, where it says that India is not yet 4th largest $4 trillion economy, may be true, but there is one more nuance here. Because IMF must be following this same principle for all countries. You can't be looking at India in isolation. Therefore, that's what I'm saying. This truth is more nuanced. So what IMF has done may be true because they might have used the same metric, same conservative approach for all other countries. So India definitely must have surpassed UK, because for UK also the similar approach IMF might have used. But if you look at India in a standalone manner, then the number comes out to be less than $4 trillion. So that's all, friends, in this video. I hope that you like this video. If you have any questions or comment, let me know in the comment section. Otherwise, I'll come with a new video next time on a new topic. Thanks for watching till the end.